MD Exploration. Thank you, digging our way. All right, MD ticker, Toronto Stock Venture, a junior company on the Toronto Stock Baby Venture. What do we got here? Basic materials. Stage 1, nice. Look at that. Stage 2, explode. Topping action, go up or down. No, went down. Oh, bounce around that 12-month moving average. Down, sideways move. Wicks. Remember, all noise. Smaller time frame closes that could whipsaw you. Down, down, down. Oh, going to close above that 12-month moving average. You're starting to slow down. These are warning signs. It's not super healthy. And then really based here. And off it went, and now right now we're in this we're just drawing out this pattern that broke out actually, I believe, in February. There you go. Let's copy that arrow. Oh, what I notice here, okay, this is my implied measured move. Something is why? Okay, here we go. Grab mode. Right there. So right now this is the confirmed measure move. This should be going up, or that's my target, about 160, close to these previous support turn resistance. It's tested here. You know it's even valid. It's a wall. It's resistance. It's tested again. So this is target right there. We are hitting some monthly defined resistance along the way, and bring back down the price action. And right here we closed above this wall, previous support turn resistance. So right now we're in the zone where we're trying to go through this next level before bouncing up, and then that becoming support, and then bouncing up all the way to the target. If that's meant to be, if that's in the cards, that would be the natural pattern. I would see bounces off those, and each time flipping, bouncing, and then going up. But these wicks, man, but the stock has a tendency to have a lot of volatility on the smaller time frames. We're going to go check on the weekly. We're going to get some detail about these wicks. You don't want this to be tweezer tops. You don't want this to be blowout candles. We are far away from the 12-month moving average. So we want to make sure that this is just a pullback. And if we could get a good entry even lower here between below 120, 115, start to see turning back up on the smaller time frames. And if it's on contracting volume, then this could give us a move that maybe next time, when we hit that monthly defined resistance, we will be able to go through, and it will turn as support. And then just like that, this is to the moon. All right, let's zoom in on the weekly. Stan Weinstein. We're going to compare it to JDXJ, the junior gold miners. And what do I have here? Let me get an arrow. Remember the super duper important Mansfield outperforming the SPX above an inclining 30-week moving average. Check, check, check. Above Ichimoku Cloud, we've been in a stage 3 or stage 1. Ichimoku Cloud, it's below us. Now we're starting to create support. We're above it. Look at that noise. A lot of erratic. In 1 week went all the way up there. Sellers coming in below that monthly defined resistance. Oh, we're out now. So now we actually closed above that monthly defined resistance back in February. March, we're pulling back down and then back up. Not quite able to continue right now, going back down. So I'm wondering if we're going to get another test here, or how long we're going to get this sideways move. And the longer the better. We'll let a chance for that 30-week moving average to catch up, to give us a nice springboard, a good low risk environment where we have that 30-week moving average protecting us, and we know that our support is holding at those levels. So the more time it takes to sideways move, the better it is, the healthier it is. You wean out all those weak hands, those people that are not holding for the long term, and after that you could hop on board when this continues. Oh, look at that red candle. Look at that red candle. Okay, I just want to see the breakout candle. Yeah, here it was. This is the original breakout candle right here above weekly defined resistance, right below, right about here, right there. Weekly defined resistance. Oh, broke above twice the average volume of the previous, a lot more than twice the average of the previous 4, 5, 6 weeks. So that's very interesting. Oh, the next month, look at that red candle. But I wonder, that's not very good. A lot of selling right there. Another big red candle right here. So even the price went up, there's a lot of selling. This one, there's a lot of selling that happened right here. The price managed to go up, but there's sellers. There's still a lot of sellers here. So I don't know what's the underlining aspect of this company, what type of news drove this. But there is a lot of selling. So what I do for these candles, there's a wick. I have to drill down. I want to see, because that's a big warning sign, red volume. So it's still in the red candle. There's a big wick right there. It's hidden a little bit by my marker. We're going to zoom in. So on the daily, a lot of volume. Oh, still a lot of volume on other days on green candles, but this one just barely right there. Barely green. So that could still be a lot of red volume. Daily, not telling me much. Okay, gapped up. Big wick. So lots of red volume right here. Here we have lots of green volume. So I really want to settle the case for this red volume right here, this red candle, for that day that it gapped up. 30-minute chart. Okay. Huge green volume on that up candle. And after that, price action went back down, but on lots smaller volume. Came back to fill up the gap. And right now, still going down. Volume still very light. So that looks like a pullback within a still ongoing uptrend. And when you're in doubt, the trend, you could identify it many ways, just a price action, but sometimes it could be confusing if you're too close to it. But that's when you have those moving averages. 12-month moving average going upwards, 30-week moving average upwards. So what you look now for are entries on pullbacks, healthy pullbacks on low volume. And as long as you're not overcoming or breaking down those bullish aspects that made you, in the weight of evidence, choose that stock to say, hey, this is an A++ setup. As long as you're not breaking those back down and creating bearish evidence, and the scale is still fully loaded on the bull for the bull case, then you're good. So this, I would actually wait a little bit, let that digest, stabilize, let that 30-week moving average catch up. And after that, when you start having a green weekly candle starting going back up, so this is going to start, you're still even with that sideways move, you're still overperforming the gold miners. Let that slow down a little bit. And when the Mansfield starts going back up, you never want to go long when the Mansfield is decreasing. You want to wait until it rolls over. And that's going to be where you're going to want to enter right there when it starts rolling over. If you don't get some crazy red candle volumes, make sure that stays low. You don't want people dumping. You want to go up when those sellers are out, but it should not be increasing red volume right there. All right, Midland, looking nice. Definitely in the early stages of a stage 2. You had the initial breakout here confirmed, pulling back, which happens regularly within 1 to 3 months. And now we know pretty much the levels that we need to respect before we enter. All right. Thanks for watching. Ciao, guys.